Hey everyone, it's Zack Beck. Having a good credit score is essential in today's society. Whether you're looking to buy a home, rent an apartment, or get a car, having a good credit score could be the difference between you being able to achieve those goals. And the main goal that everyone likes to pursue when it comes to a credit score is the almighty 800. So the main thing I want to do in this video is break down in detail the benefits of an 800 credit score, the specific steps that you can take to actually achieve it, irrespective if you have a bad credit score right now, and then how you can maintain that score long term to continue to achieve your long-term goals. So let's take our time, dive into the details, jump into it right now. In today's society, it feels as though we need a credit score for just about anything. Like I said previously, whether you're looking to buy a home, rent an apartment, or get a car, you need a credit score to prove your worthiness to that potential lender or the person who's trying to sell you something, that you're able to actually be able to pay off that loan or make the payment as a whole. And whether or not it is fair, that is not for me to say. That is just the system we currently have in place. And it's important then, whether or not you really believe in credit scores or anything to that extent, that you at least pursue having a good credit score so that you can unlock some potential benefits. Now, before I get into the details of an 800 credit score and the steps needed to take to get there, I want to be really clear about something. I personally do not believe in taking on unnecessary excess debt, specifically when it comes to having consumer debt, because I believe that puts you in a position where you have a negative net worth instead of working towards having a positive net worth. So generally speaking, I try to avoid utilizing credit cards. I don't carry any consumer debt myself. I really only believe if you're going to have any form of debt, a mortgage is probably the one that's most responsible and acceptable, and having a good credit score can position you very effectively to save a lot of money if you have a good credit score when you do go forward and actually get a mortgage. So I just want to be really clear right now that I'm giving you this advice because that is a system that we have in place, and it really will hopefully help you if you have a better credit score in the future and unlock some potential benefits. And on that note, I want to talk about the benefits of having an 800 credit score. And whether or not you're at the low end or at the high end of your credit rating right now, it's important that you continuously pursue this type of goal so you can maintain a good credit score to achieve these different goals. But the primary benefits are as follows. Number one, you have a higher likelihood of getting approved for a loan if you actually have a high credit score, specifically at 800, because that is in the exceptional or very, very good range. So you really want to pursue that. So when it comes time for you to actually pursue getting a mortgage or something to that extent, having an 800 credit score really positions you very effectively, because what it sends the signal to the lender is that you're very low risk and you're very likely to pay back the loan in full. So it's basically an indication to someone that you're a responsible individual with your finances, and the way that you can actually get there is by being responsible with your finances. But that's one of the main benefits, is you have better approval odds when it comes to pursuing a loan. Secondly, you get a better interest rate. And this is very important when you think about the life of a loan, especially when we're considering a mortgage. Whether you're going for a 15-year mortgage or a 30-year mortgage, having a lower interest rate on that mortgage could be the difference in hundreds of thousands of dollars over the life of the loan. So that right there should be a substantial motivation for anyone looking to purchase a home in the future. Unless you're going to go purchase a home in cash, which I wouldn't say is a terrible thing, but generally speaking, most people don't. If you're going to go forward and actually pursue buying a home in the future, you really want to do everything you can to boost your credit score, and an 800 would be an ideal goal to pursue, because once again, you're more likely to get a lower interest rate, and that could result in saving you a ton of money in the future, which then you could actually invest and place into the market so it could grow over time and generally be bringing you even more financial benefits long term. Another financial benefit of being able to have a good credit score, specifically closer to 800, is generally you have the opportunity to have lower insurance premiums. Once again, we carry insurance for many things, whether it's for a home, for our cars, for our personal health, things of that nature. Generally speaking, if you have a better credit score, it actually can bring your insurance premiums down, because it shows, once again, you're a responsible individual. So that's another long-term financial benefit of having a good credit score. So even if you're not the type of person who's out there spending money and utilizing credit cards and things of that nature, I'm not here to encourage you to do that all the time. I'm just saying that you should have the ideal goal of having a good credit score, so that way you can save money in other areas that then you can put to work long term to achieve your long-term financial goals. And you generally get better offers and better rates and different benefits when you have a better credit score. And you need to be really careful, and I just want to do a warning to you right now. Just because you can get a good credit card or get a better benefit from that shouldn't really be a motivation for you to go and utilize that credit card even more. That's how credit card companies really trick you and how they get you into spending more money unnecessarily. You can get travel points, rewards, things of that nature, which, like I said, some people can really utilize and benefit from. I'm not here to disparage that or say you shouldn't do that, but what I would say is that you really want to be cautious that if you're utilizing utilizing a credit card, you're not doing so just so you can continuously boost your credit score. You don't want to be spending money unnecessarily just to be able to get some fringe benefits like vacation points or anything like that. Instead, save that money that you would have otherwise spent and then use that to pay for your vacation, for your flights, for your hotel, that kind of thing. All right, now that we understand the benefits of an 800 credit score, now we want to tell you the different steps that you can take to pursue it. Now, this is not a guarantee that you're going to achieve this depending upon your personal credit history or anything to that extent, but if you implement these different habits, you should be able to over time see your credit score grow and hopefully reach the level of 800, which is where I am at right now. So from that perspective, the first thing it's very important to do is to make sure you build or you rebuild your credit history. Now, this is important and it's something I took a while to learn when I was just turning 18. When you turn 18, people are offering you credit cards, taking out student loans, doing all sorts of things. And at that time, I didn't do any of that. It wasn't until my parents told me that I needed to take out a credit card in order to get a credit score. And I thought to myself, well, I don't like debt. I don't want to pay for things I don't have money for, so why should I have a credit score? And what they told me is that it's necessary, like I'm telling you right now, to be able to go and purchase a home in the future, to be able to do other things. And that's just the system that we have. We can say it's messed up, but that is the system that we do have. And one of the ways you can do this is by pursuing a secured credit card. And what that is, it's different from a normal credit card because basically you then have to put cash into a separate collateral account, which is equal to the amount of credit that you're offered on that credit card. And then basically you utilize that to pay down the credit card debt that you have after you've paid for it. So if you're going throughout the course of the month and you need to buy your gas and your groceries, you do it with a credit card, but when the end of the month comes, you pay it off in full from the money that's placed in that collateral account. And by doing that, what you're doing is you're basically essentially saying that you're setting aside X amount of money during the course of that month, but you're continuously paying off the credit card, and it's simply a means for you to be able to build your credit history. This is a very secure way of going about it, and it doesn't put you in a position where you're taking out unnecessary debt because you've already set aside the money and basically you've spent that money already. So that's one thing that you can do, and it's actually a really easy way to get started, and it prevents you from going overboard and spending unnecessarily on things that you otherwise wouldn't be buying. Another safe option you can take to get started is doing what's called a credit builder loan. This isn't like a normal loan where people actually give you money and then you go and spend it. What you do is that you're offered a certain amount. That money is set aside in either a certificate of deposit or a savings account, and you do not gain access to that money until you've paid the lender the amount that you've owed. So for example, let's say you took out a credit builder loan of $5,000. That $5,000 would be taken by the lender, set into a specific savings account or a CD, and then you pay that lender $5,000 over the course of a set period of time. Then once you've paid that off, then you gain access to the $5,000. I know it sounds a little bit odd because basically you're giving them money that they have already given to you, so you really don't gain anything in the end. The main thing that you're gaining by doing something like that is you're gaining credit history, and that helps to boost your credit score. So from that perspective, these are two approaches that you can take where you're not taking on any unnecessary debt, you're only benefiting your credit score, because if your only goal is to pursue purchasing a home in the future, these are two steps that you can take without putting yourself in a very risky financial position. Now, alternatively, you could just take out a normal credit card and do that, but notice that when you do that, you're doing so with much more risk because you might be tempted to pay for things that you do not have money to do so. Also, you have significantly higher interest rates when you're first starting out, so you position yourself in a way where you could fall behind pretty easily. So if you find yourself being a little bit riskier in that regard, you don't really trust your spending habits, maybe look at those first two options that I talked about, the secured credit card or the credit builder loan, and those are options that you can pursue as opposed to just getting a normal credit card and then running the risk of finding yourself in debt and not building a credit score, but actually really getting a bad credit score at the end of the day. Now, one of the most important steps that you can take to boost your credit score is to hit the like button for the YouTube algorithm. Now, I'm just kidding, but if you wouldn't mind doing that, that would help the channel out a lot, help push this video to other people who might need to hear it, and it would mean a lot to myself personally. So if you wouldn't mind doing that right now, I would really appreciate it. Now, your credit history accounts for 15% of your overall credit score, but one that accounts for even more is actually your payment history. This accounts for 35% of your overall FICO credit score, and this is important for you to be aware of because this could really hurt you, and it is what generally causes people to get a bad credit score over the course of time. So one thing that you want to do when you're actually pursuing anything that relates to a credit card or any sort of loan that you've taken out is that you pay everything off in time. You do not want to do anything where you're actually paying your bills late because this is going to have a dramatic effect on your credit score as a whole. Also, you really want to be aware of the fact that if you're taking out a loan on a credit card or if you're taking out a personal loan, especially if you're doing something for normal day-to-day purchases like gas, groceries, or anything to that extent, not only do you pay your bill every single month, you pay it off in full every single month. Now that is very important because credit card companies will provide you with the option of paying the minimum payment every single month. And what happens is once you do that, the remaining difference between what is owed versus what you've paid, then you're charged interest on that. And that interest will compound over time. So you could see yourself spending significantly more money for something that you could have purchased with cash, and it's going to hurt your credit score over time because then you're going to fall further and farther behind where you're not going to actually be able to pay it all off. And an automated way that I like to utilize when it comes to doing anything with credit cards is enrolling in auto pay. And make sure you enroll in auto pay and have it set to pay off in full every single month. That way you never find yourself in a situation where you either forget and miss a payment or you only pay the minimum amount and then you find yourself paying additional interest to the credit card company. Do what you can to make sure you're setting up a system to prevent you from ever falling into debt, and also by doing this, it's setting you on a strategic pathway to actually achieve the 800 credit score. Now, another critical area that accounts for your credit score is your credit utilization. This accounts for 30% of your credit score, and what credit utilization is basically how much credit you have offered versus how much money you're actually spending based on the credit. For example, let's say that you had a credit card that had a $10,000 limit on it. 30% of that would be $3,000. So you never want to have spent more than $3,000 based off of what your overall remaining balance is. And I would say try and keep it lower. The lower to zero, the better. But generally speaking, the lower your credit utilization rate is, the better your credit score is going to be, because once again, it's showing to the lender that you're not maxing out all of your credit cards, you're not maximizing all these loans and putting you in a position where you cannot pay them back. So once again, you're indicating to the lender in the future that you're going to be a responsible person with your finances to be able to actually take out the type of loan they're going to provide you with. Now you might be saying to yourself, well, Zach, is the current credit score system always going to be in place here in the United States? And the answer to that is maybe. We don't really know. That is because Congress has actually been pursuing additional measures to actually eliminate credit scores or to have the federal government take over the credit reporting system as a whole. Now this is a very interesting proposal. It's actually gone forward in Congress, but it hasn't gained enough traction yet to actually become law. So the thing that is important for you to be aware of is if you're reading headlines right now about credit scores being eliminated or proposals or policies coming out of the Biden administration or from Congress saying that you're no longer going to need a credit score, just bear in mind that the current system we have in place is what you need to be abiding by. Also, once we get into a new system where there might be a different approach altogether, it doesn't necessarily mean that you can default back into bad habits, because my guess is that it's going to end up mirroring something very similar to what we have, just within the guise of the federal government's perspective. So from that perspective, it is always good to have these wise financial strategies in place by making sure that you're doing everything you can to be a responsible individual if you take out any sort of credit or if you take out any sort of a loan, so that you can achieve your longer term financial goals. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm, help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf so that you can make well and wise informed decisions moving forward. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.